The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to John in Austin, Texas. Hey, John, what's going on?
Hey, buddy.
How you doing, man?
I'm so good I can't stand it. How about you?
Good, man.
God bless you. All of God's best to you and your family.
Wow.
You teach us how to make money. You are such a man of integrity and honesty.
Right.
I so admire what you do in your show, and you just deserve a whole lot of credit. And the other thing is you would be hard-pressed to invest in something that's going to bring you a better return than that gold report. It is fantastic, buddy. I just so appreciate you helping us make money.
I appreciate it, man.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. Let's make it a great one. Believe in yourself and everything you can be. James Garner. Market-wise, let's take a look at it out here. We have the Dow Industrials up 168, NASDAQ up 101, S&P's up 33, gold contract flat at $1,097 an ounce. Silver down 3 pennies at $14.05 an ounce. Platinum up $10 at $8.29 an ounce. Copper flat at $2 a pound. Light sweet crude up $2.50 at $32.03 a barrel. You get oil off those lows, folks. Oil does want higher price. Going to be wild watching oil bounce with the market. Bonds, 10-year down 10.6, 128.11. 30 off 19, 158.31. King dollar. King dollar up 497 ticks, 99.62. The euro's down 80 at 107, and the yen is trading at 118.75. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have out here? We got a little trader's market in a huge way, folks. SPY out here, this is what we've done with the SPY. Now, correlation-wise, I suspect what we have here is that we're going to do a B to a C of an ABC structure on the way down. And what you get is this. First off, we made the low. The low that was established out here in the SPY, 181.02. That was on Tuesday. That was coming into the August 24th swing low. Did it with lighter volume, 286 million versus 504 million. We're 10 points off that low right now. The mind blow, folks, is 10 points in 2 days, no doubt. Well, guess what? We only have another 10 points to go where I speculate we're going to be going. And what that is, and that's a heck of a bounce, by the way. That's amazing, actually. It's insane. But where that is December 18th. So the low of December 18th, that price point there is 199.83. What we have done, we contracted with volume yesterday. We're contracting with volume today. And that is one of the definitions inside an ABC structure on the way down. When you're setting up an ABC down, you go down with volume, you go back up with lighter volume, and then volume unleashes again on the way back down. So thus far, the SPY, the Qs, the diamonds, the small caps, they're all setting up the exact same way. The Qs up $2.45. We had established a low out there with 86 million shares. Yesterday we went up with 61. Today you're going to do about 40. That's just how these things like to shake out. Gold contract. What do we have with gold? Let's go take a look at the gold contract. Gold. They couldn't whack gold out here on a Friday. It's a huge positive indication that gold still wants higher price. We're 1097 in the gold market. We've done 129,000 contracts. You had an inside day, meaning you didn't do much, either higher or lower. Bottom line, your high that was established out here on January 7th is 1109. We did 217,000 contracts at that price point, at 1109. So Wednesday, we do 193,000 contracts. That high bar there is 1109. I'm sorry, the bar we're going after is 1113. So the bar, 1113 is the high volume swing. We went after that Wednesday, and we did 193,000 contracts. What's so cool about that, folks, is this, is that you didn't test it, you're underneath it, and you're underneath that level with volume pushing. That brings the probability higher that you're going to go up to that level, and we'll see whether we can break it and if it has volume behind the move. We go over to the silver contract. We take a look at silver. What we have with silver, silver held $14, which is a miracle by itself. We got to $14.36 today, and you had volume up there, but whacked it again with price. What they haven't done yet, the market's not over, they haven't got it under the $14 level. They're trying like heck, haven't done it yet. So what silver has not been able to do is that it has not been able to handle the $14 price point and simultaneously have volume and price follow through. And that's what I expect we're going to need in order to see all these metals go a lot higher. Bond market, what do we have with bond? We got a failure on price, failure on volume inside the bond market. The 10-year got to a price point of 129.08. The amazing part about this whole deal is that it got to that price point, but that price point is not the high. The high is 129.18. So the market, even down, I mean, it's just amazing. You know, Dow's down 2,000 points, and the bond still won't go to high. You know, so we'll see what type of retracement we get. It's pulling back today. The volume is not high on this pullback today. King dollar. Let's go take a look at King dollar. King dollar failed on price yesterday, failed on volume. Right now, you got 25,000 contracts, and it's holding price. You know, so King dollar very well could go test the high of yesterday, which was 99.95. We'll see if, in fact, it can get to that level and how it lays out at that particular level. Let's go to Alex in Newton. Hey, Alex, what's going on, brother?
How you doing, Tom?
I'm doing great, man. Yourself? So
I am scared.
You waiting for that snowstorm?
No, it's Washington who gets it. We don't.
Oh, good. That's good.
We will get like 1 inch, maybe.
Okay, nothing. 1 inch, that's nothing.
So I'm scared about what SPY is doing.
Okay.
And we have 3 days in a row of tick of 1,400 and above. Okay, we have trend low. We have volume contracted. To be honest with you, I don't see the bounce above 194.5.
Okay, good. Let's stay right there. We'll talk about that. That's awesome, man. Alex and I are going to be coming right back, folks. We want to hear from you. Our phone number is 877-927-6648. Dow right now is up 161. Nasdaq's up 99. S&Ps are up 33. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We're talking with Alex from Newton, and we were talking about the bounce and where Alex thinks this baby may go. So, I can see, what you're looking at. What he's looking at, folks, is that you have a shelf, okay? So picture, when we came down, hard from 207. And there's a shelf that's hanging there. I mean, is that where you're going with this thing, with this 194?
50% retracement,
okay.
194.41.
Yeah.
I don't want to see... I don't see 199 because it's more than 1618.
Yeah.
And if that's the case, if it will bounce over there, so we hit the bottom. Usually that's how that goes. So I think, I'm looking for a place where to start with my shorts.
No, I know. Listen, man, and it's going to be a tough one, and it's a great question and great discussion, because what happens, folks, is that. So picture on the way down, we didn't get a bounce at all, So that says that, guess what? You get a market that's extraordinarily weak. And the real key is going to be, of course, is that, okay, where is this going to fail? Now, the level that you're talking about, well, if I say 194.86, that's going to be pretty clean, because if it got over it and closed underneath it, then you'd have something to back into. Do you know what I'm saying?
Yep.
Which would be cool. And then the next level, and what I mean back into, folks, is this, is that when markets are testing, you have to have something that they have tested. So that level there was the downdraft, and it was a vicious downdraft there. That's when we went from 1940 to 1880. Okay, that's a good 60 S&P points. So to throw a shot there would be pretty good, because then you can put your stop on the other side of 195.85. Now, if it gets over that, more than likely you're going to see at that 197. Where I'm going with this, Alex, is that because we did 100% move of a move, and we didn't get any bounces in here, it's like, okay, man, this market will have a much larger bounce, and the reason I'm figuring that is that it's the deviance inside the marketplace. It was a one-way move on the way down. where I'm coming up with, and I know you know this, but just for the folks out there, where I'm coming up with the 199.83 area, what has happened many times, folks, is equities like to go to the last place where they had come down with volume. And as you go back up, that's where that level is. Now, to address the aspect of the Fibonacci ratios, there's no doubt, if in fact, I'm cognizant of this, is that if it goes up to that 199.83, what you'll have is that then you have a retracement that is saying that the market's pretty strong and that you wouldn't have a large ABC structure on the way down. And what I would expect after that, because my head's already been there, is like, okay, so then what you're going to do, you go up there, you set up a smaller ABC down. That smaller ABC down comes down and doesn't break the lows, Alex, right? And starts building cause. So
okay.
That's kind of where that's where I'm at right now. But what's going to be cool here, folks, is this, is that it has to do with, how do we go up to those levels? And what I want to do is I want to look simultaneously at the SPY.
It's been a while when I saw 3 days in a row tick is around 1400.
Yeah, no, you're right. There's no doubt, man. There's no doubt.
There's no fear in the market at all.
There's no fear, and I agree. I know. Believe me, I know. And we'll see how this shakes out. But I think the way that I'm looking at this right now, and I had said this to my son yesterday in the morning program, it looks to me like this market's going to be so deviant that it's going to get closer to those highs, and people are going to say, see, I shouldn't have sold, I shouldn't have sold. And where I'm going with that is this, is that what we didn't get, and this is there's so many yings and yangs in this, folks, because what we did not get at that low, and that means that we will come back down to those lows, we didn't get a 5-day arms with anyone scared.
Yep.
That's so unheard of, folks. It's unbelievable. I mean, all you hear in the press is that this is the fastest that we've ever come down since the 1800s. Well, guess what, folks? Yes, that's what we did. But the thing that's unbelievable is that is saying that the fear wasn't there, and bottom line, we'll be back down.
2 days ago, Goldman said that reduce your position. And today they said we hit the bottom.
Yeah, I know. Well, actually, and also what happened, and there's no doubt, and Alex Fink, from BlackRock, Fink was out there, a couple weeks ago saying he thought, things were bearish, and then he came out this morning, he says, well, I think they're better now. They're freaking out, folks, because people are basically getting out.
They're uploading their positions, that's for sure.
Yeah. And what is happening, Alex? Okay, so the Larry Fink, thanks, Peak. What a couple folks are telling me. Let's do these numbers, because what they're telling me actually in the den is that the 199.90 is a 0.618 retracement. Let me just see if that is.
I don't see that.
Yeah, I believe they may be taking it off a different one.
They're taking it from October high.
Yeah, right. So what happens there, folks, is Alex is correct. It's not off the ABC that we're talking about. So, what could happen is that let me just put this on a weekly, though. So if you put it on a weekly, yeah, see, it's interesting. So if you put it on, let me just see this on a weekly for a second. Hold on. That would still be right there. Wow. Okay, no, it is. Alex, do the weekly.
Yeah, I see that.
Yeah, so it very well could be. Yeah, on the weekly, that could be happening.
Okay, we'll see.
We will, man. And the real key here, and this is what's so cool, what Alex brought up, folks. The key is going to be, where do you start selling? And what's your money management at that particular point? Okay, because that's going to be the hardest place of the setup, and it has to do with the length of the A to B leg. That's that's a long length. You don't want to be.
I'm not going short at 195, but I will close all my IRA positions, all 401ks. That's
Yeah,
for sure.
to be long. No, I'm with you there. I know, man. It's going to be intense, man, watching this thing shake out, because what we're also going to have to hear, folks, is this. This is how this thing shakes out. You're going to have to hear out there that, hey, things are okay. Everything's fine. And we start hearing that last night. It's like, oh, my God, the first day, things are okay. Don't worry. Don't worry. And as soon as you hear don't worry, what blows my mind about the don't worry deal is, like, just think about something, that these folks that are, whether it's large banks or large broker-dealers, they actually understand that they can get away with that when, in fact, 2007 is only 7 years ago, right?
Yeah, and banking index, they at the bottom.
I know, man.
Crazy.
It is crazy. Cooking, brother.
Thank you.
Have a great one, man. Have a safe one. Dow up 160, NASDAQ up 98, S&P's up 33. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is up 178. NASDAQ's up 105. S&Ps are up 35. And as we do each and every Friday at 30 past the first hour, we have our man, Mr. Steve Rhodes. Don't forget, folks, every trading day, Steve's got a great program right here, 1 to 2 Eastern Standard Time. Now, right on your cell phone, folks. TFNN.com. Hit Tiger TV. Great program. 8 o'clock in the morning, 5 in the afternoon. You can also come over to our website at TFNN. Test drive Steve's newsletter right now, Mastering Probabilities. Great newsletter. Go to newsletters. Go to trading newsletters. Can test drive it 30 days absolutely free. Steve Rhodes, what's going on?
Well, I want to get in on this conversation that you and Alex were having.
Oh, cool.
It's a great conversation.
Yeah.
You know, and that's really what we're all trying to do is try to figure out, hey, where is the market going? So I want to pick up on a couple of things. You know, one of those was you were mentioning the ARMS index.
Yes.
And I think you correctly said it. You haven't seen the 5-day ARMS reading that you would typically see with capitulation moves at a major bottom, right?
Yes, that's correct.
Okay, so one thing that I'm sharing here with folks, and this is the trend index, but just simply taking it because there's a couple interesting things that also occurred during this bounceable bottom that we have.
Okay.
And that's the following. One, as we were making these lows this week, this chart here shows the trend index, but only the closing trend, which is what I look at. And when it closes
that's right.
above,
No, that's what you want to look at with the 5-day. That's right.
Yeah. So when it closes above 2, those are days, and they're marked here in green, where we see either bounces or bottoms. The red arrows on my screen are where they just simply failed to perform.
Okay.
But you'll see the 2 yellow boxes here, the October lows back in 2014 and our current low right now. During that entire time period, as the market was moving lower, we never did get a closing trend reading above 2. Which, as you were pointing out, really is kind of interesting. Now, you were taking a look at the 5-day, and, you know, I tried to go back to figure out why didn't we get, in essence, a 5-day reading there? And what I did was came up with a 10-day ARMS. And that's what this chart here shows. And when I take a look at a 10-day ARMS reading out here, what I create, and I've just inverted it. I've inverted that reading to help me identify, you know, bottoms inside this indicator versus bottoms inside the market.
Yes.
And I've got these blue levels here that help to identify what I like to call an upper and lower threshold level. And when the 10-day reading gets below that lower threshold level, which is like about a minus 1.2, 1.18, 1.9, right around that level.
Okay.
And if you take a look at the red arrows that are on my screen here, that is actually where we get that. So yes, we did not get it on a 5-day, but I've been tracking the 10-day ARMS reading for the last couple of years, and it works as a great indicator. Both up at doesn't work all the time, like everything else, but we did get one of those readings here 3 days ago, when the market formed that bottom out there. So I just throw that piece of information out there to really help to solidify that we could get that bounce that you're looking for. You know, we really could get up into those. It really could get up into those levels. Now, I'm taking a look at the New York Stock Exchange, and I would throw out the following. I'm going to put up a 2-hour chart here for the ES Mini. And I have found one tool, well, I found many tools, but I found one tool that works really, really well. And it goes back to celestial type aspects. And it's when the moon is at either perigee or apogee.
Yes.
And you've got to pay attention to that, because it doesn't just impact, you know, the tides of your boat going up and down and so forth. It really impacts the markets. Why, I don't know. I just know that it does. And so we're not going to see the 1909.50 level hit today. I don't think we're going to see that going into the close. It's possible. But on Sunday night, I would throw out to Alex, I'd throw out to everybody else, if we see the ES Mini start trading above 1909.50 and we see price coming back down to that level and testing it and holding as support, the market is moving higher. The market is absolutely going to move higher out there. If, in fact, this level holds as resistance, we've probably seen the bounce that we're going to see, and it would be the time to consider jumping onto the short wagon out here.
And right now, folks, we're at 1894. Okay.
Yeah. Yeah, and one of the other patterns, you know, there's several patterns that I like to pay attention to. That is just simply, it's a hidden indicator out there, and it's a great one. I mean, it is truly one of the single best overall indicators that I have found to help you understand should you be on the long side of the market or the short side of the market. Now, here's another kind of cool thing. This is the S&P 500. And I'm showing the weekly bars that are out here, but the blue lines that are going across my screen are actually the daily horizontal trading range boundary lines. And we can see that this, and really, when we take a look at this, you and I, we're always looking at just really the closing price. We're looking at the opening and closing price. We're really looking at the not the upper wick, the lower wick out there, and these horizontal trading range lines, as you know, because Bud Rolfe is the father, the grandfather, the godfather of these lines out here. But interestingly enough, and I've automated this tool, but at 1900 or 1899, we're trading at 1902 right now. Isn't that wild that this week, even with that push down, that we're trading right on that horizontal trading range?
Right.
So here's my take. And I'm not showing any of the midpoint levels. If we see the ES Mini close above that, what was the number that I gave you? 1909.
Yes, 1909 it was.
Yeah, 1909. We see that, plus the S&P being able to hold support here, plus the 10-day arms reading. This says, I'll call for a bounce up to the 2058 level. I think that's even higher than what maybe you were, and I didn't hear the number that you were looking at there. But I'll just go up to that next trading range. If we weren't able to bust it down, then it'll catch everybody by surprise.
Right.
It'll be a great place to sell the market from.
Right. Yeah, because 2000, the equation between the SPY cash S&P would be 2005.
205. And these horizontal trading ranges, they work so well. It's so cool, isn't it? That we just take a concept that's so simple, whether they're diagonal or they're horizontal lines out there, to be able to just simply assist us in trading. We can see even, its price here in the S&P 500 back in February of 2015. Price got above it, just kept coming back down and tested. Never got back up to the top of that range out there. It looks like it was somewhere in the midpoint level. And what we've learned is that when one level of support fails, price is going to go down to the next level of support.
Exactly.
And isn't that odd that when we did see that failure, which was really back in August, right? The August 24th level, take a look where price found support.
Right.
Right at that $1,900,
right.
1900 mark level. And so, we're sitting there right now, and I think Sunday night, especially with regard to Asia, what a move last night in the Nikkei.
Amazing.
The Shanghai, the Hang Seng, they did well also.
And that's another indication that you're in a bear market too, by the way, folks. Okay, that's bear markets move like that. That's the bottom line.
Yeah, exactly. So I think Sunday night, early Monday morning, because we're handing the ball off pretty well to Asia, so they should be able to do something with this, and we'll find out. Of course, most people are going to be watching who's handing the ball off in the football games.
Yeah, as the Patriots win. Well, it's going to be great. See, the Patriots are already going to be over by the time Hong Kong opens, which is great.
It's a good thing that Miami beat them, because now the game is in Denver, right? So they don't have to deal with all the weather.
Yeah, that's one way of looking at it.
Yeah.
I like it. Listen,
right,
man,
Tommy.
You have a great weekend, safe weekend.
You too.
We look forward to show Monday.
You too. Take care.
Stay there, folks. We'll be coming right back. Dow up 181, NASDAQ up 106, S&P's up 35. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. And folks, as you come over to our website at TFNN, what you're going to see right on the front page is that you're going to see the Gold Report subscriber event, how currency exchange rates impact gold companies. I'm going to be doing a webinar for my subscribers to the Gold Report. This webinar is going to be on February 2nd, 6 to 7 Eastern Standard Time. And what we're going to be talking about is literally what this says, currency rates impacting gold company. You know, we've been talking about the rand dollar for quite a while and how that affects South African companies, meaning that when gold was at highs, the rand dollar was at $6.50 per $1 US dollar. That was $1,910. The rand dollar now is at 16.5, and gold is at 1,098. Well, gold companies are making more money at 1,098 than they were at 1,900. So if we wonder why Harmony Gold just went from 50 cents to $1.50, well, that's what it's about. Now, as you come over here, when you hit how currency rates impact gold companies, what you're going to see is number one, where you can sign up. If you actually, let me just go back here for a second. Actually, if you go under breaking news, you're going to see how exchange rates impact gold companies. I wrote up a short piece so you can understand what we're going to be talking about, because there's two separate issues. One issue is that, you know, what they actually make. The second issue is even larger, and what the second issue has to do with how much debt the company had prior to the movement in the currency, and how fast they can pay down debt. It's astronomical, actually, how fast you can pay down debt. So if you'd like to come to that webinar and you are not a gold member subscriber, you can test drive it for a month free. We're going to be talking about the Harmony. We're going to be talking about South Africans, the rand. But guess what? What has happened out here, it's just not the rand dollar. The peso in Mexico has got killed. The Canadian dollars got killed, okay? So bottom line is that we're going to put them all together so you can see how you can analyze these and understand the yin and the yang of all of that. Let's go to Sean in Canada. Hey, Sean, what's going on, brother?
Hey, Tom, how's it going, man?
It's going great, man. How you been?
Oh, been pretty good. Last time I called in, I was short the Qs, as we were talking about, and I was fortunate to bank some coin, and actually did get in on the long side. So now I'm riding this is what I'm deeming the ABC gauntlet. Becoming a wild ride there. So,
that's a fact.
So yeah, I'm really, I liked Alex's call. I had those same kind of thoughts around the 1950 area. However, that being said, I wanted to call in and chime in on something else.
Okay.
And Steve goes ahead and beats me to it, which is, way where no one would be expecting at that 2050 level. Now, I was thinking more 2040 on the SPY.
Okay.
Or, I mean, on the SPX. And the one thing I just wanted to know quickly is that there's a giant gap in that range at around the 2040 area, and also on the Qs, you'll see it there too. Now, obviously, assuming we go in this direction and keep bouncing higher, obviously I'm not going to try to hold. I don't know how long I'll be able to hold on when I'm in, doing well, right? So I'm looking to unload going into somewhere where it's going to turn, and I'm thinking in the first couple weeks of February, if that's the case, because of the options expiration. And the thing is, and it was interesting about the Fibonacci level. When you said 199, I just looked at it and eyeballing it. I'm like, yeah, that's 61.8%.
Yeah.
Ballpark. I didn't know how close it would be, but
sure.
But here's the thing: you can get there, have some consolidation. Maybe it'll set up a bull flag, or it could just go there and look like it's going to turn. And who's to say that in one day we could get a 40-point spike up, spike down? In one day, sometimes it'll do that. So I don't think I'm going to be able to hold that long.
This is a great.
My thoughts. I thought I'd chime in a bit there.
It's a great thought process, and what happens, folks, is that if you're biased, that it's going to come back down. You shouldn't be holding. I mean
Exactly.
What tends to happen is this. As Alex said, listen, man, I'm getting out before that. He's not necessarily going short, but that's what you should be doing, because what happens is that, it wouldn't be a surprise to wake up in the morning and, the market's down 300, okay?
Exactly.
So you have to get it set up like that. Now, this is where we have a huge edge, folks, okay? And, if you're driving in your car, no matter where you are in the world right now, okay? We do live programming at 8 o'clock in the morning. We start at 8 o'clock in the morning. John Logan's out here, okay? John Logan last night, he was up all night long. He has an office in the Philippines. I mean, they were trading all night long. That is very unusual, folks, inside a network, that you have people that are up, not only just reporting, but they're actually in the trenches. So what happens is that there's a lot of us out here that are always paying attention to all these markets. That's a huge advantage for all of us. So what I expect we're going to see happen is that it's just not going to be us that drops out of bed. You're going to see action in Australia. You're going to see action in China. You're going to see action in Hong Kong that will be able to relate to you, and John Logan will relate to you at 8 o'clock in the morning, okay? And that's important. So as we're coming up to these levels, that is what you want to put this whole package together with. So it's going to be wild watching this whole thing shake out. There's no doubt. But there's plenty of information that I expect will be released. And that information more than likely is going to be very subtle. But let's picture that inside Hong Kong and Shanghai simultaneously, they go into a swing point. They fail on price. They fail on volume. Guess what? And what I've found is this, is that when you're doing something like this, because this is going to be subtle, it's just going to be like a small fail. It's not going to be gleaming, okay? But if you get a small failure, and what a small failure is this, folks, is that you'll get over a swing point, you'll close under it, it just has lighter volume, and there's not a lot of price destruction. That's the beginning of the deal. And when you get that, it's like, what it allows you to set up trades with the right reward versus risk and the right money management, in the U.S. in the morning, which is pretty cool. So,
yeah, that's. I'm just blown away, honestly, by the quality of the show, Tom, and it's been really not a dull moment watching any market at any time, as you're saying, and I do see the similar thing. You want to be able to catch that swing point before it's gone,
You do.
Not get too greedy. That's why personally I'm thinking maybe unload half and start going on the short side, maybe a month and a half out on some nice puts.
What you want to do, that's correct. What happens is that I would suggest it's not even load half. The money's going to be made, folks. You know, the last couple days of money on the long side, yeah, it was good, fast, furious, all of that, okay? But the bigger money is getting set up on the short side and not being long in case it gaps down again. So as soon as you get uncomfortable, get out and just stay in cash.
That's a good point.
Just stay in cash. Cooking, brother.
All right, good talking.
Okay, man. Oh, hey, we got 10 more minutes. Okay.
Okay, I'll hang out.
You hang right there, brother. We're going to be right back. Dow right now is up 202. Nasdaq's up 113. S&Ps are up 37. Stay right there, folks. We're coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow's up 204, Nasdaq's up 115, S&Ps are up 38. And as our man, Mr. Steve Rhodes, he's talking about hammer candles on a weekly basis in the den right now. And these are extraordinary, folks. Okay, so this is how this works. When you get a hammer, okay, the strength and or weakness of a hammer has to do with the wick as well as the top of the body. And if you take a look at the SPY, this is one monster hammer. It's about as strong a hammer as I've probably seen in years. So what that says, you know, as we are talking about the bounce here, that is saying that you are going to get a heck of a bounce. And you know, so take it for what it's worth. We're talking with our man Sean from Canada, and we were specifically talking about where we think this bounce may go.
Yeah, brother. I just want to thank you again for what you just mentioned there, not to hold a position too long, because sometimes you're wrestling with yourself as a trader, you know. And I had already thought, okay, you know what? Like you said, when it gets a little uncomfortable, you've made your cash, you know, it's time to you know, take your profits and start loading on the other side. So, yeah, you know, I appreciate that because I was really struggling with, you know, how much to do, and maybe, like I said, half, or we'll see. It all depends on the option prices, and if we get a nice big pop. You know, if you get a big pop on one day, you're up. You know, you're up 400% on these babies. So,
right.
You know, take your money. And a lot of the times they come back down to, you know, a 30% discount. You can always put a little more in, but of course, being on the long side isn't going to last much longer at all. So.
Somehow, what you have to do is just you train yourself to keep taking money. I'm telling you, folks, in a market like this, if you train yourself to just keep taking money, you can trade both sides of the market. You know, but if you don't take the money, guess what? It's going to take it back just as quick, man.
Exactly.
That's just how it goes. Cooking, brother.
All right. Well, hey, listen, thanks for having me on. I love you guys, as always. Keep going. Keep getting them. So glad to be a part of the Tiger family, Tom, and you guys are doing a tremendous job.
Thanks so much, man. Have a great one. Have a safe one.
Hey, have a great weekend. Thank you.
We're going to go from Canada. We're going to go to our man Mike in Thailand. Mike, what's going on, brother?
Hey, Tom, how's it going?
It's going good, man. Thank you. The weekend's coming. We have had a decent week. We get some action, man.
Yeah, Tom, I'm really thrown off here because I've never seen you this bullish before, and I think I might have screwed up, but don't.
Well, no, weren't you with us in 2007, 2008? I thought you were.
No, I was. Yeah, I was. That's right.
Well,
yeah,
I was just as bullish then, man. I mean, we were bearish. We took it all the way down. Then the most amount of money we ever made. We were along the night that the market went up 900, and we flipped it around, then went short again. So you just haven't seen us in a trading market, basically, probably. I guess maybe, who knows?
Okay, because Tom, what I'm thinking is short term. Isn't it possible that the market's just short term? Isn't it possible that the market's a little overbought? And let me be.
No. The market is definitely not overbought. The market is definitely, and in fact, what you know what had happened is that as one of the Tigers said, my bear suit is currently out at the cleaners.
Your what?
My bear suit is currently out at the cleaners. It's getting cleaned. Yeah. It's getting ready.
Yeah, but isn't this an opportunity? I mean, you know, and you're not the only one saying this, and I read it all the time. Everybody wants to get rid of their stock on these pullbacks here, on these bounces here. They're just getting rid of them.
I don't listen, man. I just don't understand. Okay, the short positions just, you know, we just came down beyond belief, man. Okay, it's gonna bounce. Have a great one, man. Have a safe one. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it.